Welcome back. How are you all doing today? As usual, this is our week preparation video where we talk about fundamentals. We talk about every single thing we need to know or we need to understand before we actually jump into a new week. And as usual, we're going to start with DXY. But I got a comment in my last video. I mean, the one of something like this. Okay, that we've not been talking about the institution positioning, which is the COT data. And I quickly want to address that because the reason why we've not been talking about much fundamentals is because of the government shutdown. All right, we cannot really get any actual, new data because of this. It is predominantly what is keeping us on the low right now. And what majority of my trade lately has been pure fundamentals. I mean, pure technicals, to be honest. I just take a look at maybe a couple of inflationary data from Canadian dollar or maybe something from the UK or something from Japan when I'm trying to pick a trade in that direction. But anything pertaining to the United States dollar, I just stick to the technicals. All right. So I hope we are kind of like clear on that. Now, based on if you're not coming back to the data we have today, okay, taking a look at the data we have next week, excuse me, all right, you will see that we have a very flat data coming next week. Number one, on Monday, we have little to no high impact data. On Tuesday, majority of the banks are on holiday. We have bank holiday in the United States. We have bank holiday in Canada. As a matter of fact, in France, we have bank holiday as well. However, on the same Tuesday by 8 a.m. in the United Kingdom, there is jobless claim. Okay, and it's expected to drop lower than previous, which is very, very good. Okay, considering what we've seen so far in the United Kingdom economy. So let's quickly take a look at the UK economic heat map. So right here we have the UK economic heat map somehow loading up. Let's give it a minute. Okay, it's the internet. There's nothing I can do about that. So maybe it's the H finder stuff. Okay, now it's back up. All right. So yeah, UK economic heat map right here. United Kingdom economy is still not looking super bad. All right, in my personal opinion, you can see we have some, we have GDP. I mean, the pound impact itself, based on all of this data, is 57.14%, and the stock market impact also pretty much the same. If we break this down one after the other, GDP growth, manufacturing PMI, and service PMI. I mean, when we take a look at the growth itself, okay, we are seeing a very decent number, or let's say decent reading, and the inflationary data aren't really looking awful either. Coming, I think we have to extend this a little bit to retail sales for the growth. Okay, and let's take a look at inflationary data right here, and then we have the labor data right at the bottom there. Although the news coming on Tuesday, I believe it's more like a labor data. Okay, when we have the unemployment claim, okay, that is what we're expecting on Tuesday, okay, by 8 a.m. in the United Kingdom. And actually, this is just like the number of people that probably quit their job or got fired or probably needs, and they need to file for stimulus check. And that is what is being released right now. Okay, now the impact might be quick when it comes to effects. It might be very quick, pump or dump based on the actual, and then the market will probably recuperate and start moving in its own direction, all right, in its original direction. But the major thing right here is to focus on the overall data in and of itself, which is the inflationary data in the United Kingdom is still pretty sticky, far above the Fed, the Bank of England target. Okay, we are expecting every central banker has a benchmark of 2% for their inflation. Okay, 2%. Anything above it is bad. Anything below this is good, but it shouldn't fall below 1% because falling below 1% would keep the country as stagflated. Okay, it will keep the country stagflated, something like that, or maybe deflated, like what they're experiencing in China. Okay, everything is super stagflated. I mean, there's no inflation everywhere. Everybody's just spending money. Everything is pretty cheap over there. Honestly, I have a friend in China that was just like, she just went to a concert, and I was like, concert? You know what that costs in Nigeria? Okay, not an average person kind of events you want to visit in some countries all around the world, even the US. For you to visit some concerts, you need like $100 to $200. You understand what I'm saying? So in China, everything seems like not super expensive per se because there's mass production over there. So I don't want to get distracted. So let's go back to what has been discussed right here. So now the benchmark for all the Feds, all the central banks in every country is 2%. That's the benchmark. Now anything above it is not good. Okay. If it's below 2%, it's quite decent. for the consumer price index, especially for the consumers, because they can get something very cheap. Although that might now cause interest rate ripples, okay? Because when things are quite cheap, people tend to buy some things more. Okay, people will withdraw. It will deplete the interest of the banks because people want people to keep money in the bank. All right. So when things are super expensive, bank will decide to just start hiking rates because they need to control the money being spent. Okay, so it's all intertwined, but I don't want to go into fundamental 101 or 102 or 107. So let's just say, so far so good in the United Kingdom, the inflation is not looking very good. Okay, the CPI is at 3.8% and the PPI is at 3.4%. That is terrible. Okay, although when it comes to service PMI looks very good. Okay, manufacturing PMI looks decent. It's not up to 50, but it's decent. Retail sales is also booming from where they were before, which is negative 0.2, to where they are right now, 0.5. It looks good. And this, so when it comes to growth, also the growth looks pretty sticky. But at the same time, it is what we got actual, which was October 16, right? What we got as an actual in October was quite bigger than what we than the previous month. Okay, than the previous month. The previous month was negative 0.1 right here, which is not very, very good. Okay, so when it comes to the growth, I will give growth in the United Kingdom around 65%. Okay, for growth, we give it 65%. You know how we used to do these things. Okay, so when it comes to inflation, and then we have the labor data, right? So this is how we used to group them. Okay, so when it comes to inflation, I would say I'm gonna just give them like 15%. Now that's pretty terrible. Okay, but now focusing on the labor data is also not looking very good. Okay, first off, the employment change is reducing. Okay, from 332K to 91,000, which was the actual that we got in October 14th. That is not good. That means a ton of people are losing their job. Okay, and when people are losing their job, they will depend more on the government. They will depend more on their credit cards. So more violence. People will be out there, which can technically lead to homelessness and stuff like that. Okay, that is not very good for the economy. That's not even good for a personal person. Okay, even when we are considering human beings themselves, that is not good. So then unemployment rate will automatically skyrocket, and that is exactly what we saw. 4.8% from what the market was even forecasting, which is 4.7%. So that is also not very good. So I would say that although 4.8% is not bad, okay, it's not super bad, but when you compare it with previous, okay, it is not good for the economy. But when you look at the general view of the country, 4.8% is still a bedrock of the stable and moderate unemployment rate in the United Kingdom, if you know what I'm trying to say. So relatively, I would give them 25% on the labor data. It's still not a very good number. Okay, but I would say this is more like my fair assessment. Okay, we used to get stuff like this before on H1. I don't know why they take it off. All right, but at the end of the day, so to speak, I would say I follow these assessments right here. So which kind of what now leads me to what we're expecting from the data that we have coming on Tuesday, which is GDP, I mean the jobless claim. So if this happens to come like this, that will add some extra point to the labor data in the United Kingdom, which would probably tilt it towards 60% in their general readings. And that is very good for pound CAD to rally, pound Aussie to continue the movement, pound Kiwi to continue bullish movement, pound dollar to also continue rallying to the upside, because we've seen a couple of rallies started or they just kind of kick off since Thursday last week. Okay, let's take a look at some of the pound dollar trade I'm holding. Let's start with pound Aussie. Where's pound Aussie again? Let's start with pound dollar. Pound Kiwi, this pound Kiwi, okay? So you can take a look at pound Kiwi right here. I took a buy somewhere around here some time ago. I think 26th, 25th of October. All right. So and so far it looks very good. Okay. The same thing is happening to pound USD, which was actually what I was expecting. What I was explaining earlier. This was Thursday, last week Thursday. Or let's just go to the daily time frame so we can see everything more clearly over there. So let's just go to basic right here. So you can see actually it started on Wednesday. Apologies. Okay, this is Wednesday, this is Thursday, and this is Friday. Okay, you can see we have 3-day candle that automatically engulf this intense bearish candle that happened on Tuesday. Okay, on Tuesday we have that very crazy bearish candle, and Wednesday, Thursday, Friday ultimately did what? Engulfed it. So I'm already buying this. Okay, just so we're clear on that. Now, for further momentum to the upside, I would say I like to see something like this. Okay, then maybe we're going to continue to move to the upside. Okay, we've got an intensive, okay, bearish momentum. Okay, at least the bare minimum is to see the pullback to this region. Okay, is to see the pullback to this particular region. Maybe we're not going to get a further downside from there. I don't know. But right now, I'm buying from here, and if we get something like this, that will be very good for my currency, because ultimately, when we go to the weekly band, you see that this particular pair has been bullish for a really, really long time. Okay, and right, really, really long time. I'm talking about since June, July, August 2022, right here. Okay, you can see we have higher high, higher low, higher high, higher low. We have relatively new highs almost like every six months. Okay, since 2022. So this is the latest high, which we kind of fell around that 1.33000, literally. Okay, and I'm expecting another leg to the upside, probably back to 2021 high, which kind of fell at 1.4000, something like that. Okay, that is my forecast on a longer term. Okay, on pound dollar. But ultimately, when you take a look at this on the monthly band, you see that it's more like a range, just like euro dollar as well. Okay, so this is more like a very decent breakdown on what's on pound dollar. And right now, the reason why I'm relatively bullish on this is because number one, dollar is actually not doing very good. Okay, sentimentally, there is a lot of stories that surround dollar bearishness, dollar losing its momentum, losing its grasp, losing its strength in the global market, especially with China. The China tough with the United States has been detrimental to the strength, even to the peace of the dollar itself, and to the viability in the global space. Okay, not so many people believe in the dollar strength again. Not so many people believe in the hegemonic strength or control that the United States has over the global market. Although it's not like I said this earlier, maybe in the previous video, or maybe the one before that, I said the United States leverage or edge in the global market is not going to disappear like that, but they are stretching it too much. Okay, they're just taking, they're not giving back. Okay, they borrow, the debt is going crazy, their trade balance is getting worse. Okay, all they have is a perforated stock market and probably an extremely crazy and unexplainable GDP. Okay, but at the same time, I would say it's still the strongest country in the world. Okay, military, GDP, all sorts of things like that. But all we have to just watch out for now is how long is this going to last? Is this another, sentiment that will probably lead to United States blowing up again to like a greater high, dollar getting to a greater number, a greater price level in the market? Or this is the real one this time? It's all diminishing. It's all come crashing down. It's all going to come crashing down. I don't know. All right. But all I know is that this is what I have in front of me. And if I'm going to make money in trading, this is what I have to focus on. Okay, the sentiment, all the story, all the drama, I listen to them. I watch those videos. But do I sleep on it and turn it to my whatever? Nah, definitely not. Okay, I'm still going to have to trade what is right in front of me. So, and that is exactly what I would advise every single one of us to do as a trader. Focus on what is in front of you and just trade it. Fundamentals, technicals, those numbers that they are coming in, readjust yourself, reposition yourself, and just trade it. Simple arithmetic. It doesn't have to be complicated. It doesn't have to be too scary. Don't make anything too complicated for yourself at this moment. Just trade the basic things, okay? And just have fun. I always say this: have fun in the market, okay? Don't make it too boring for yourself, because the market is already boring. So we are moving away from pounds now, and we're jumping to Thursday, because on Wednesday we don't really have the data. Also, then we're going to Thursday when we have the normal inflationary data in the United States, which are all still tentative. And we know why. As a matter of fact, it's on Thursday and Friday. We know why. Because of the shutdown. It is still super active. And I read something on, I think it is right here, on Forex Factory. I put in the link tab. All right, let's see if we're going to get that information again. Trump said no U.S. government official will attend the G20 summit in South Africa. I don't know why that is going to happen, but all the best to them. If they don't, I don't care. I genuinely do not care about that. I don't see it anymore. Okay, but there was a report on the shutdown. I think this is something that it might be quite interesting to read. Government shutdown costing the U.S. economy billions of dollars each week. See, this is like a testament to what I'm saying. Let's quickly take a read. Let's take a read. Okay, with bipartisan congressional talk to end in the United States, government shutdown bogging down on Friday. The heat of the national economy is growing. Experts said even if there is a reopening of the government in the next couple of weeks, you're going to see a visible, don't forget, you're going to see a visible and permanent loss of economic activities as a result of the government shutdown. Okay, you're going to see what? You have to take note of that. a visible, it's going to be visible, like it will be obvious, and permanent loss of economic activities as a result of the government. So another testament to what I've been saying all this while, like when this thing gets come crashing down, when the reopening kick off, we're going to see some very crazy volatility in the market, especially on the dollar itself. It's going to probably fly to the upside or come crashing down heavily. And you want to be very ready for that. Okay, you don't want to marry the sentiment, you don't want to marry the market, but you want to be prepared for it. Okay, so that's something we should pay close. That's actually not the data I was looking for, but this is also something we should pay close attention to. Shut down the previous sentiment with job worries. Yeah, this is another thing that we should pay close attention to. Like, we are not getting any labor data. Okay, we are not getting any labor data. NFP, unemployment rate, wage growth. Okay, what else again? We're not getting the jobless claim as well. Those four, we're not getting jolts also, making five. We're not getting jolts. We're not getting unemployment claim. We're not getting unemployment rate for the past 2 3 months, 2 months now. We've not gotten those three. We've not gotten NFP, and we've not gotten the wage growth. Okay, I'm talking about the average hourly earnings. We've not gotten those five labor data. And when the reopening happened, what do you think is going to happen for 2 months? Okay, NFP that kind of like spark the market every now and then. We're not getting that. So imagine they just erupt everything out at one particular day. And Trump also had a chance to start tweeting, start doing all sorts of things. It's gonna be crazy. Okay. So please get ready. All right. It's gonna be a blow off. All right. I'm still trying to see if I can get that story on the short band, but the last video I posted on Saturday, definitely the update was there, but I couldn't get it yet. I don't want to be searching on Google now. I don't want to waste too much of the time. But tentatively, we have the inflationary data in the United States that we are not sure. Not just the inflationary data, actually, we have the unemployment claim as well. We are not sure if this guide will be released yet. Okay, so let's pay close attention to all of this. Although last month we got the PPI data, okay, we got the PPI because what not, there's a need for that data to be released. So they can actually release the data despite the shutdown, but they just chose not to. I don't know why they do all of that, but it is what it is, right? Nothing we can do about it. Although on Thursday we have the labor data in Australia, which I would really, really pay close attention to. Unemployment is expected to drop by 0.1%. Good. Employment change is expected to rise by literally, give or take 6%. Okay, which is actually very cool. 5.5% literally, which is very good. 5.5K. That's your employment change. Apologies for that. Which is very good, and it's gonna bolster Xauusd to the upside. Okay, so we have labor data from the UK and Australia, and then we also have the monthly GDP in the UK again. 0.1% expected to drop to 0%. That is not good, guys. That is not good at all. Okay, let's watch out. Okay, you might get a surprise. But so far, so good. The labor expectation, okay, or the job expectation, both in Australia and the UK, actually serves my trade position right for now. But once the data are released, we're going to get the actual, and then we're going to know where I sit. Okay, and if you also kind of follow me, some of you actually follow some of my trade because it belongs to a couple of groups I belong to or I own. So maybe you're also in all of those shows, so you have to be patient and you have to watch out very well. Right now, I'm trying to open the Australian economic heat map, but it seems to be also loading. Might be my internet or whatnot. I don't know for now. But while we wait for that, let's take a look at the top setup right here on H-Finder. So we have pound card bearish. I'm not sure I will be following this. NZD card bearish. I'm not interested. Aussie card bearish. I'm kind of interested, but my technicals is not aligning with sell right now. So I would probably wait for another push to the upside before I sell Aussie card off. But I'm going to share the update with you as time goes on. This is not loading. I don't know why, but it's not loading. Let's give it another crack. Okay, let's take another crack at it. If it makes sense, we're going to take a look at it again. If it doesn't, we're just going to move forward away from Australia to economic hitman. So moving back to where I was explaining, China 50, I'm not interested. I took a buy on China 50, but my broker, God, the kind of leverage, the kind of crazy amount, I was risking the normal usual stuff, and I tried to use 0.05, okay? And when I set my stop loss, I was saying negative. If I should leave the trade to run, I would have taken a negative $3,450 loss, on my account. What the heck is that? Then I changed it to 0.01, and I'm still seeing negative 1,000, something like that. So I had to like close my buy on China 50 in a loss because when I took 0.05 already, I have the swap. I mean, the spread it don't cost me around $112. Like I'm seeing a negative 112. That's the spread itself because of 0.05. So I was just pissed and I just closed the trade. General, like I'm not interested in China 50 because I couldn't really trade that. If I'm trading $1 million account or maybe a 500K account, even on a 100K account, I still cannot lose 3,000 and something. That's like 3% of my entire capital. It's crazy, right? Like plus 3%, plus 3%, and I only reach 0.5% per trade. 0.5% per trade, because my account size is quite decent, so I can trade all of this. So if I'm risking 3,000, that is just quite awful, and I just can't. So I really love the technicals of China 50, and I really want to hold it for long, but I can't show the loss that it entails. If I have a bigger account, I would have taken it, but I can't show that $10,000 loss because there's a high possibility. Despite the fact that the technical is good, we can still run into loss for sure. So I just have to think about the loss first before I think about the profit because the profit will also mad. Like I'm talking about 20K, 25K. So I want to focus on the loss. I don't want to focus on the profit because loss is the only guaranteed result in trading, guys. All right. The profit is just something that comes once in a while. I mean, we know what I'm talking about. Unless you're obsessed, then I would say it is well. Nasdaq, I took a buy on Nasdaq. Dow, I already have a buy. I have 2 positions on Dow right now. S&P 500, I'm not interested. Bitcoin, I took multiple trades on Bitcoin so far. On average, let's say I'm just breaking even on Bitcoin. I took a buy, I took a sell. Bitcoin has been very, very shaky lately, so I'm just going to take a break on it. But I'm going to talk about it. The pair I'll be talking about today is actually very brief because I'm in so much of the trade position already. So I'm just going to talk about silver. Yeah, I'll talk about silver for sure. USR, I'm not interested. Nikkei, I have a buy trade on Nikkei. I was going to add some more trades, but there's actually no serious technical that kind of support it, so I just kind of let it go. UK 100, I missed out on this and I saw it at a very small price that I could have joined. I couldn't join, so I'm going to let FTSE go this time around. Russell, I'm not interested in Russell for sure. I'm not interested. So we're going to talk about Nasdaq, Dow Jones, Bitcoin, silver, and maybe pound card and Aussie card, and then we're going to call it today. So let's go straight into technicals. Open that. Oh, finally, Australian dollar economic heat map right here. So let's quickly take a look at it. I don't really want to spend so much time here, but let's take a look at it for a minute. All right, for a minute, because some of you really love fundamentals and you like the way I break it down. I don't know how, I don't know why, but you kind of like it. So let's just do it. So this is the growth again in Australia. Okay, simple stuff. And we have the inflation data in Australia again right here, pretty simple. And then we have the labor data. All right, now based on what we've seen in the economic calendar for Australia just now, okay, we're not gonna do that. We're not gonna do that. You can see right here we have expectation to exceed previous from the employment chain, and we have the unemployment rate. The expectation is to come down a little bit because we're expecting a softer point on the unemployment rate, which if they actually come exactly like that, is good for the economy and for the currency. It now comes probably better, meaning if the unemployment rate comes softer, maybe you get 4.2% or 4.0%, that's much better, okay, for us to kind of like continue the hawkish momentum or bullish move. And if the employment rate also comes quite higher, that would be good for the currency. So now back to the actual number themselves, okay, or the economy itself. The GDP, the quarterly GDP is still at 0.6%, quite low for the kind of country they run, okay, but it beats the previous, even beats the forecast. So that's also a very good, it's a positive reading for them. And the manufacturing PMI is kind of came the same. Service PMI is reducing, it's contrasting, which is not very good. So on the growth path, I will give them roughly 50%. Okay, on the let's say 50% is good enough. Okay, they don't really have goods. Retail sales, yeah, we've not factored retail sales into the mix because I also take a very good point. 1.2% retail sales is very sweet. From 0.2%, which was the previous, we got 1.2%. That's a whopping 0.8%. And the market was even forecasting 0.4%. So I'm going to just tilt it to 60%. The growth is very good. They have a good service PMI. They have a very good retail sales. And they have a decent growth in the last couple of months. Okay, based on the growth data, the growth survey, it looks very good. Now, let's talk about the inflation. And then we talk about labor. Then we see how we can aggregate it together. So the CPI, PPI, still pretty high. Don't forget the benchmark again, 2% for inflation. Okay, and both are above the benchmark. As a matter of fact, CPI went straight up. Okay, from 2.1% to 3.2%. That's a whooping crazy number. The market was forecasting 3.0%, and we got 3.2%. So that's good for the currency though, but bad for the economy. But we're focusing on the economy here. Okay. So when it comes to PPI, from 3.4% just torpedoed to 3.5%. Also not pretty good for the economy, but very good for the currency. So I would say plus and minus, I would give it maybe 25%. Okay. Because why? 3.2% is not too crazy. Okay, it's just above the benchmark. Okay, we rarely actually get benchmark. Okay, to be honest with you, so that is also not crazy. All right, not crazy. You have to agree on that. Employment change is very, very good, and the unemployment rate is also not good. But the number is not bad. Okay, the reason why it's blue is because 4.5% is not bad. Okay, but anything above 4.5%, maybe like 5% is too hot. Okay, but 4.5% unemployment rate is manageable for the country. Okay, but anything above that is crazy. So I would give them maybe 45%. No. They have a very good employment. So let's give them 55%. Okay. So relatively, currency look good. I would say 71.3%. But the economy doesn't look good, right? Because of the what? Because of the inflationary data. They are very hot. Okay, very, very hot. So I'm just gonna say I agree with the currency, and I probably kind of agree with the economy as well, right? But I wouldn't give it 42 personally. But I mean, it's an AI, let's say it knows better. So that looks very good to me. I'm saying we give it that. But generally, I'm still very bullish on Aussie. And that is why I'm currently buying Aussie dollar. Where's Aussie dollar itself? That's Mr. Aussie dollar there. I'm buying it. It's still very young. Okay, the trade is still very, very relatively young. Okay, but I mean it buy. As a matter of fact, if it happens on Monday and the market gap down a little bit, I will out of this buy. Okay, but my stop loss generally will be at the bottom. You know, no matter how much I had or I've added, I'm still gonna have a stop loss for all of them. And I'm still gonna risk relatively 0.8 to 1% of my entire capital. Okay, on that particular trade. And I don't open more than maybe give or take. No, it's not 0.8. I don't risk up to 1%, excuse me. I would say 0.7 thereabout. Okay. Because after all my position, I don't risk more than 3% on all of my. If I open 20 positions, I still don't risk more than 3%. But I've never opened 20 positions. The highest I've done is 12. Okay, on different currencies. Okay, sometimes I have to open another entry because the market kind of did below my entry. So it just kind of makes sense that way for me. But I still don't risk above 30% because I'm trading some funded account, but you don't want to go crazy. Okay, but Gold also really looks very good on an average. And pound Aussie, I am currently buying pound Aussie because of pound itself. Pound looks super good. Okay, it looks super good economically. So economically and the currency also looks super good. So I'm kind of like leaning towards British pound. And if I get this pullback again, I said it earlier that I will add more buys to this pound Aussie. And you can see generally, I mean, what has happened in the past will happen again, even though the previous result does not guarantee the future result. Okay, but at the same time, what has happened in the past will relatively happen again. Okay, that's why we all can trade because when you see double top before, you know that the market will probably come down. So that's why we are able to trade double top. Okay, it's simple as that. The reason why we have all this pattern is because we have seen it happen in the past. If nothing is repeating itself, it will be hard to trade the market. Simple as that. So let's just stick to that. All right. So that said, I think we've covered all the fundamentals we need to cover: the news, the economic heat map, the top setup. Now let's just jump straight into the technical part, and that will be all for today. Okay. So back to DXY. I think DXY has a long to prove. Okay, to us that it's a solidified asset at this point in time. Okay, especially when we have it sitting down right around there. Okay, because this is a very formidable region. Okay, at that 99 zone. Okay, 99.50, that particular zone right here. This one. Okay, it has a very much to prove that it can go up. All right, it can go up. However, I don't want it to go up because of my position. And based on the shutdown and what I've read so far, I just share something with you that analysts are saying that even if the shutdown is if it's over and the government reopens their office and everybody's back to work, it is still not looking good for the United States. Okay, it's still not looking for the good for the currency for the economy. So I mean, I would just anticipate for something like this. Okay, I'm just going to anticipate for something like that. Period. Okay. However, I'm not going to be oblivious to the fact that we have a structure right here that could potentially push dollar back to the upside. But based on fundamentals, I think we have a chance for this particular move. So what happened next week, Monday, Tuesday, Wednesday? is very important because how the candle closes will determine if we're going to get this continuation to the upside, this particular leg, which will make it 1, 2, 3, 4. Okay, I'm not sure if I counted very well, but how many eyes we have? We have the first eye, second eye, the third eye. Good. We're going to get the fourth eye and potentially maybe the fifth eye before the market have to put it down to the upside. Or maybe this is just everything. Okay, maybe this is just everything. So now let's jump straight into my trade recommendation. Let's start with gold. Okay, even though gold is not part of the trade recommendation on Edgefinder, but I think I've got something for you guys here. Okay, on the 4-hour time frame, you can see gold is flattening out. Okay, gold is technically flattening out. Okay, right at the bottom here, we have what we can kind of call, I think, something from here. Okay, we can kind of call this like a range. All right, we can call it a range, something quite close to that. Let me lock it so we can expand a little bit and can make some sense out of this thing. So right here we have some very decent momentum on gold. We have a double top right here. The market break below this particular low, which technically makes it bearish, even on the 4-hour time frame. And since then we've seen another leg to the downside, and since then we've been trapped inside this range. Although we've seen multiple tops. Okay, like 1, 2, 3, 4 tops, but we've only seen like one particular bottom. So there is high possibility of us getting another bottom right here before we can now call this a flat out range band. Okay, because right now we've only seen one bottom, an actual bottom that retested this particular high right here. You can see right on the left hand side we have 2 resistances right here, and now for the first time we're using that support. Okay, so now we have support right here. The market almost tapped it, used that support again, but that was questionable. Okay, however, we've seen 1, 2, 3, 4, 5, 6. Okay, that's also quite questionable. I'm just trying to stretch a little bit, but you get the idea, right? We have multiple tops and just a very scanty bottom right here. Okay, so potentially we can get something like this in the next couple of days. So I would probably be leaning towards selling gold next week. Okay, probably. However, if we get a clear break above here, a pullback, then I'm done. Okay, don't forget we have this particular structure right here. Okay, if it continues to go up like this, yes, it's also very likely to go in that direction. So watch out. Okay, but if this particular structure is broken on gold, I would look into selling. So whatever happens now would determine how I approach gold. Okay, there's less fundamentals to kind of support gold's momentum right now, even silver. Okay, but best we can do now is just stick to technicals and watch out for any kind of news from China based on the central bank over there. Are they still buying gold, or some sort of macroeconomics data, or maybe geopolitics conflict somewhere in the world that could help in probably crashing gold or boosting it to rally a little higher. So watch out for that as we move into next week. This silver right here, we have silver as well. Silver also kind of share the same sentiment and the same technical structure as gold, but this one has a better clarity at the top. We have much better structure as a resistance and quite a decent structure as support as well. Okay, moving forward. So let's make this supply, something like that. Yeah, I don't want this. I don't want the drawings or whatever. Good. So now moving forward, we have resistance, and we have support right here. Although this is not up to this right here, it didn't really come down to support. Okay, this particular one right here, it did not come down to support, but it's questionable again. Okay, and we're also seeing silver also kind of tilt to the upside gradually. Okay, you can see right there we have a very slight momentum right here that's leaning towards the upside. So it's possible again, but so far so good. Nothing is clear on both silver and gold yet. So again, I'm just gonna sit down and relax a little bit before I join silver and gold. Okay, we have this particular channel right there, bullish channel, so to speak. Okay, it's kind of fading, but let's just watch out. It's not as sporadic as this. It's more like a very slow grind momentum inside that tiny little channel right there. So based on what Edgefinder is suggesting right here, that it's quite bullish. The score of 6, right? Score of 6, silver bullish, score of 6. So I would say that, all right, I would say I will lean towards, if I'm going to buy silver, it has to break above here, pull back, then I will look to buy around that 49.50. Okay, 49.50. Alternatively, if it breaks below here, come back down to this demand zone right here, or maybe support, okay, I would likely buy from there as well. Okay, I'm still forecasting possibly a leg down to maybe 44 region, okay, $44 per ounce, okay. So if it comes down to that region right there, I would consider buying also from there. So all you want to do now on silver is just watch out very closely. Bitcoin, like I said, Bitcoin is very dramatic. I've taken some good profits from it. It has taken some good money from me as well. It's very awful right now trying to trade Bitcoin, okay, especially for the fact that it has been trapped inside this range as well. You see all this crazy week, I do not like them at all. Okay, I took a short here, I took some profit here, I took another short right here after this pullback. And then when I woke up, when I checked again, I saw this rally here. So that kind of tapped me out of loss. Okay, I took some short here, take some profit. Now it's going back up. It's been dramatic right there. So simply put, I'm going to approach gold. Bitcoin right now is going to be very precise, very, very basic. All right, as a matter of fact, let's go to maybe 12-hour time frame so we can get a clearer picture of what to expect. You can see it leaves a lot of weeks behind. It has done that before in the past. So that is not something very new to us or very new to me. Okay. But overall, on the RSI, it is still leaning oversold, which is very good for me for a long opportunity on Bitcoin. And I think Bitcoin is also pretty bullish on Edgefinder right here, bullish with score of 6 as well, right? So score of 6. So that's another point of opportunity, or let me say something I would consider before I buy Bitcoin. So ultimately, a break above this 106 region, 106,000 region on Bitcoin, it's followed by a very good pullback, would maybe encourage me to go long on Bitcoin. Whatever happens right inside this box at the bottom here, I'm going to put a question mark there and I'm going to avoid it the best way I can. I'm going to avoid it entirely. Okay, so that's that on Bitcoin. Let's take a look at the NZD card and then we'll wrap it up for the day. NZD card dropped drastically. I would make you understand that I've not really checked this for a while. I missed out on that one because I would have loved to buy it. If I'm gonna buy this, I didn't really miss out. If I was gonna buy this, I would have taken a buy from there. Oh, excuse me, I would have taken a sell trade from there. Okay, but nah, it's gone. So nothing to talk about over there. Let's just work out. Okay. Let's take a look at pound card. I think I talked about pound card earlier. Anything good on pound card? Where's pound card again? Can't really see pound card over here. Okay, this pound card, excuse me. So pound card, it's within the area on Edgefinder. I don't see the area in here because ultimately this has been a very bullish momentum. A bullish pair. So I don't see anything bearish on this one, to be honest. What I would expect is maybe the retest of this particular demand zone right here. And then I will look for buy opportunity. Okay, as a matter of fact, if the market wants to be good enough to me, I want to see a range. But fall right here, we test the trend line, we test the demand zone. I want to see moving RSI at oversold as well, and I will launch a very big buy on the pound card. That's how I'm going to approach it. So I'm going to just wait for like a week or two on this one, see how it materializes, see how the build up looks like, and I will update you when I take the trade. Period. So WTI, anything good on that one? I'm not sure. I'm not sure if there's anything good on WTI. For now, I took a shot and I closed it already. Took a shot right here, take my profit right there. I'm done with this. Okay, a buy at the top here, or maybe a further drop to the downside, which I will now be selling by the way. Okay, so I'm more interested in buying WTI than selling it. So I'm just gonna stay away from the WTI as well. So guys, I'll see you in the next one. Do enjoy your week. Okay, don't forget to subscribe to my channel. Don't forget to follow me on all of my socials. And I'll see you. All right, please stay safe and have fun. Have a good one. Bye for now.